maybe not tomorrow, but over the next few days. So yeah, I think it fits in nicely with some seasonal weakness in the Canadian dollar, seasonal weakness in oil and stocks. It's a poor month for stocks over the longer term. In the last few years, it hasn't been that bad, but we have some weakness in the stock. So it all kind of lines up, I think, for a dollar CAD trade on the FX side.
I know it's a fairly new instrument, but I mean, everything's about the trade war, right, Adam? Do you have anything in USD Yuan? We're pressing new highs. It broke out on the announcement of new tariffs a few weeks ago, came back and checked it. Any view on the Yuan? I think that until the Yuan starts to come back down, there's, I look at it as more being a risk-off environment. Do you see it that way?
Here's how I don't have a chart. I have the chart on Bloomberg, so I don't have it on this graphic here. But I mean, there's not so much to talk about the chart. It's just blue sky above where it's broken out already.
Okay.
But here's how I see it all coming to pass: is that the bond market's signaling a deep global slowdown, right?
Yeah.
And the way it gets to the U.S. or to North America is via the currency market. I think you're going to get a much stronger U.S. dollar in the months ahead, and we have Trump complaining about it already, but the market's like this evil genie that squeezes you, right? And even not even applies to the president of the United States. I think we're going to see the euro really roll over, the yuan roll over, 5-6%, maybe 10% in the euro. And then you just have to have some importing of weakness in the United States, right? You had to buy corporate profits, and you see some layoffs. And I don't think the U.S. is hurt in the same way, but I think the currency market is really about to buy dollars, and you see it even today. It came off a little bit, but we have the euro finished last month on the lows, right? Finished last week on the lows.
So 10%, you're talking under parity for a longer term objective here.
I think that's the first target's going to be parity. There's 104 right at the bottom of the euro there, and there's nothing to like here. And I even wonder if Draghi doesn't say, you know what? I wonder what the FX market reaction to that would be if he says, you know what, we don't really have much that we can do here. It's time for governments to step up. Because at some point you're going to get there, right?
So you need the monetary route has been losing potency for a long time. And, you look around the world, including the U.S., for people to get something done fiscally with all this, diametrically opposed views and people just trying to stop each other seems to be difficult. But I also want to get back to the recession. Have you ever heard a recession being promoted and talked about, an upcoming recession before a recession so loudly in financial media? Because of the inverted yield curve?
It kind of speaks to the financialization of the economy, right? And this 24-hour news and bombarded about everything and a vile political backdrop in everything. And I remember when the yield curve inverted in 2007 or 6, whatever it was, and it was we talked about it, but you didn't see it on the front page of the newspapers. You didn't see it on CNN. I mean, now it's predicted all these yield. Everybody wants to talk about the yield curve, and this recession's coming. It is. And it becomes that self-fulfilling prophecy problem, right? And people cheering it on, which speaks to, I don't know. You could probably get deeper into what it means in the world, but you've never seen anything like it. Who would cheer on a recession? It's crazy. It's so much.
How about this, Adam? That the reason the trade war and the softening in the manufacturing sector is not hurting the U.S. as much is because it's 11% of the economy compared to 25 or so in Germany and China. The rest of the world more dependent on exports than us, and that a recession won't happen in the U.S. until you start getting weaker numbers on the consumer. And I was reading that, with what's happened to real estate prices here in the U.S., what a recovery. I mean, a lot of places are much higher than they were before the housing crisis. and rates being this low, that the consumer has about 6 trillion in real estate wealth to tap into, like an ATM, on their properties. Wouldn't
And
that help stave off a
that's why
recession?
it's so hard to put together the pieces for a recession. I think you can probably get, under 1% US growth, and that maybe feels like a recession, and that is really the tipping point, right? Because you have real estate. I believe I've been wrong about real estate. I thought it was going to pick up last year, but rates got up. What a 30-year fix got up to 4.5%, and then the market just wilted. But now it's way back lower. American housing is still relatively cheap if you look at it from a European perspective, even a Canadian perspective. Maybe not, on the West Coast where you are, but
Nothing's cheap here, buddy.
but in a lot of places it really is, and I think that can go and help the consumer, and rates lower, like you say. That it's hard, but if you were to make the US dollar so much stronger, I think corporate profitability becomes a problem, because I think 40% S&P 500 profits are generated outside the United States. So if you take away that, um, you start to run into a lot of problems. And there's pressure to cut costs and whatnot there. And then again, that mentality comes around, and plus investment just isn't happening. And isn't, you might have consumer buying, but if you don't have businesses investing, that's half the story right there. And if you look, I ask people this question: what's Walmart investing in right now?
Basically, they're investing in expanding. They're going to have healthcare services, the consumer, and their online business.
And they're online. Well, that's what the answer is. Well, they're investing in their website. So,
Okay.
if you had Walmart investing in expansion, you're buying steel, you're building stores, you're hiring, I don't know, 100, 200, 300 people a store. Now, if you're investing in your website, how many people are you really hiring? 500? How many people does it take to rebuild a website? I don't know. Maybe it's 1,000, but it's, in all companies, we're investing in technology right now. And the companies that aren't investing in are scared of it, and they're not investing in anything. And I think we've hit this kind of tipping point in technology where companies are either the disruptor or terrified of being disrupted. And it's left like this old-fashioned investment in plants, machinery, buildings, sidelined for now. Everyone.
Okay.
Technology.
All right, shifting gears to metals. Okay, they've been stars, but one of the features over the last couple of weeks, Adam, has been how the gold-silver ratio has come back in, from well over 90 to trading in the low 80s. Do you think this is the beginning of that gold-silver ratio, where you could have sold your one gold coin and bought 90 silver pieces?
I think we talked about this last time. I'm not the guy who likes to overcomplicate it. I think anyone.
That's right. I remember now.
has said, listen, I've overcomplicated so many trades, and so has everyone else who's been out there.
Oh, I did that today too.
Ruined a good idea, a good simple idea by overcomplicating it. If you want to buy crypto, buy Bitcoin. If you want to buy metals, buy gold. Look at this chart. I mean, that's it. That's a genuine breakout in the best way. Yeah, maybe back to 1,400, probably at worst. Save some powder if you have to, but I just think that's going to new highs over time. I mean, these have been the best 3 months you're probably going to see for a while, but it's monetary. We're in an easing cycle globally. We're at zeroed out on rates. 17 trillion in negative yielding debt, if not more. Gold is unbelievable trade, and silver too. But I don't see a need to get onto that. And I don't really have any kind of edge on that.
Is there anything that could change the interest rate picture, or is it in cement forever?
With Trump, you can't rule out a resolution on the trade war, right?
Would that change the
bond
negative yields situation in Europe?
I think there has been a paradigm shift in consumers, central bankers, in the whole world realizing we're not getting back to the old inflation paradigm where we're getting 3, 4, 5% inflation. And central bankers have realized they've been wrong so many times that now they're going to stay low until inflation comes, right? Before it was, okay, we have to get ahead of inflation. It's coming. It's coming. We promise it's coming. Okay, we were wrong last time. We're going to be right this time. Well, now they're saying, you know what? We're just going to keep them low until inflation comes. And that, I think the bond market is moved a lot on that. And it really changes the mathematics of a lot of investments. And so I don't see how it could change unless you really got some wage growth. And I just, it's not coming. Not
Is
coming.
that the only thing that wage growth is the only thing?
Yeah, it is not entirely out of the question. I mean, there's definitely some pressure on the lower end.
Because I don't know, it's like one of these asset classes where everyone's right. Because last year, all the money that moved out of equities moved into bonds and bond related, and they're buying junk like it's AAA. And it just seems like the whole world is right about being long bonds. And you know what? Not just treasuries, anything that has BOND at the end of it.
Yeah, especially looking
Isn't it
down.
crowded? I mean, it's crowded, but continues to be right.
It's truly the greatest bubble of our time. I mean, if you look at 30 years, buying bonds 30 years ago was insanely, I mean, it's better than stocks. And it just, you get to zero and you think, well, this has got to be it. And now you just go below zero. And it's madness. And I don't know if we're at the point where it's pure exuberance, but we've got to be close. And
I'm just trying to think of what pin could possibly pop the bubble, and I come up with, the trade war continues to escalate, and China wouldn't have to do a lot. I mean, the world's already accepted they're not buying treasuries, but the world has not. It has not been made known that they might sell treasuries, and they wouldn't have to sell a lot to create a bit of a panic, don't you think?
I mean, if you try to push up yields, I struggle to believe so, because you just have money coming in from Europe that it would sell boons, buy treasuries, and that's the reason I feel like the dollar, it's really can, the dollar's been a bull market as well for I don't know how many years now, good 5 years anyway. And a bull market probably doesn't end with a whimper. It ends with exuberance again, and I don't feel like we're there at all with the dollar. And that's the way I see it going until you see yields negative. Maybe that's the end of the bond market when
you mean here in the U.S.
When the 10-year T-note gets below zero. That is maybe the blow up. But what do you do when you can't buy bonds anymore? If you get blown out of bond, you buy maybe gold. You can't go into stocks if bonds are blowing up. So I don't know. I don't understand.
Okay. It's to me. I think these are the lowest rates in 300-400 years, right? Or at least to the Civil War. Any view on the yen that has broken down a lot of its correlations? I mean, it would trade with gold, it would trade with yields, and with what yields have done, it seems like we should be not just having taken out the flash crash low, but trading well beneath it with what's happening in treasuries. Any view on yen here?
And I feel the same way about the Swiss franc, and even more so. These, we have this risk trade going, and they could easily roll over. And I talk about the yuan and the Chinese getting beaten up, and I think the yen, if you were to add 5% to the yen, you start to run into trouble. You get above or below 100, you start to run into some trouble with exporters in Japan. And that could, you look at this setup right here. It's just trying to make this bottom here at 105. And if that goes, you're probably down through 100. You start to get some hand wringing in Japan.
92.
Yeah. Oh, yeah.
A lot of the bomb bulls have been talking 92 yen for a while.
And I'm shocked. I'm in the same camp as you, surprised. And even more so with the Swiss franc. I guess it's that intervention premium. But I think the stakes are kind of raised now. If Japan starts intervening, the Swiss start intervening, and that it's a green light for America to get involved. I don't think you can stop U.S. dollar strength. And one of the seasonal trends that tied that back is dollar Swiss. It is a very strong month for dollar Swiss.
Okay.
Second strongest month on the calendar for dollar Swiss seasonal.
Interesting.
So
Yeah.
that's it's the same trade. It really is the
Right.
dollar yen, but I'm interested to see through September 12th in the ECB how the S&B reacts, because if you look at the initial 120 euro Swissy peg and then the break, it was always around an ECB event that pushed them over the
Okay.
yen.
And then I think you mentioned that September can be a negative month for indexes, stock indexes. Does it look like it could make one more charge, or we're finally going to have a failing rally here?
I think it's a range trade. I don't have that up as well. I mean, I could probably pull it up here pretty quick with a snapshot, but I mean, I think so. Yeah, I don't want to. And it comes back to a little bit of fundamentals. All right, what's the Fed going to do? Well, I don't think they're going to be as dovish as the market would like. And then, what happens in the trade war? What happens with the ECB may not be as dovish as well, and that probably is the tips it over the edge, or a little bit of yuan weakness as well, maybe some euro weakness, any one of those things. And I guess that's part of what the bond market is saying. It's kind of surreal.
There's S&Ps in the box.
And that's it. I think, yeah.
So if we take out the upside of the box, it would measure to new highs, 3,100 or so, wouldn't it?
It could. And that's the old pain trade, right?
Right.
I mean, stocks peaked in October 2007 last time around, well after, housing started to roll over, and the bond market inverted, the yield curve inverted. So, why can't it do that again and flush everyone out one more time? I'm bearish.
Clear out the bears. Yeah.
But sure, that's the trade as far as I'm concerned, is to go with whatever this goes for now. But it is seasonally. It's, some of the weakness has not been around the last few years. So I caution a little bit about September weakness, but.
Well, another great run through the board, Adam. I think we've covered almost every asset class, currencies, energy, metals, stock indexes. Anything else that you might want to add that I didn't ask you about?
I just think, we're trying to struggle with this yield curve picture. And
okay,
I think what it says is it's very fragile right now. Fragility. You can't measure fragility in markets. And one thing really has to go wrong, and that's going to tip over the apple cart. I think that's what the market's saying right now, whether it's the trade war, whether it's the dollar strengthening a lot, whether it's something completely out of the blue, that we're in this situation right now where the global economy cannot take another blow.
shock.
A shock, yeah.
Okay.
And a shock is a strong word, but even a mild shock, I think, at this point is where we're at. So when that happens, and maybe the trade is to wait for it to happen, and then just pile into gold, to short stocks, to short oil, probably even sooner than that.
Well, I think that one of the best places, besides, of course, ForexAnalytix, to be prepared for potential shocks is Forex Live, Adam. And what a great job you and your team do there. Why don't you show the people your website and what you have to offer? And I really appreciate you coming in, buddy. Like I said, I know anytime that we're having a conversation, I could ask anything, and I learn from you every time we talk.
Oh, thanks, buddy. Well, likewise. Yes, this is our site. We cover things in real time. You can see it updating just as we spoke there. Mike Pence is in Ireland at the moment, so we cover news in real time with a bit of commentary along with it. We try to be very quick. It was a free site. I'm not selling anything. We cover 24 hours a day and just try to be a kind of commentators on the market as it rolls. And, we had a record month in August. We just had 10,000 subscribers on YouTube.
Wow.
We're, it's the market's interesting right now, and fundamentals certainly matter. So we're there and hanging in there. We didn't even talk about Brexit today. That could be a shock that tips things over.
Yes. Gosh, I forgot that.
But, everybody's heard enough about Brexit. And today, I think 2 p.m. Eastern is around when we're expecting a vote. This is the video that I mentioned. You could probably find it on YouTube like that. You search Ducker and Forex Live. Showed you how to use a squawk.
Do you guys do a similar thing, like interview other traders outside of Forex
Yeah,
Live?
we try to find the time. We're 4 guys covering 24 hours, and we have all these ideas that we've had for years and years, and it ends up just being something comes up. So we try to stick to what we do best, and we hope to expand and grow and do that, but we don't. So
look at that handsome Canadian. All right, well, you know what, Adam, again, thank you, my trading warrior brother. I hope that you and everyone your work touches during this fall trading season clean up and win the Super Bowl in January. Okay,
all right,
so thanks again, buddy.
All right, thanks a lot for having
really
me.
appreciate your input and your seasonal work. You're one of the best, bro.
Oh, yeah, thanks so much. Always a pleasure to be on. Take care.
Okay. All right. Everyone, that's Adam Button. You can find him at Forex Live at FX_Button. And that's a wrap. We'll see everyone return around Wednesday because today's Tuesday. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, Adam.